Hello, my name is James Risley. I am the Senior Research Analyst at Digital Commerce 360. It's been easy to say for years that Amazon has been winning the e-commerce race. It's long held the top spot of the top 1,000 and generated a third or more of web sales for US companies. But retail chains that long predate Amazon are succeeding where Amazon is struggling. I've got with me Don Davis, who wrote the 2023 Top 1,000 report. So Don, sure, retail chains have some legs up on Amazon, but how are they able to put the pressure on the e-commerce giant?
Well, JR, as part of the 2023 Top 1000 report, we thought this would be a good time to look at how the 3 years of the COVID-19 pandemic changed online retailing. And one of the things that really jumped out at us was that of the four types of retailers that we track, retail chains actually grew the fastest over this 3-year period. Retail chains are those that operate brick and mortar stores as well as selling online. Of course, Amazon, while it has some stores, is primarily a web-only retailer, so it's not in the retail chain category. So retail chains grew significantly faster than Amazon over this 3-year period. And in fact, Amazon actually grew more slowly than the top 1,000 as a whole. So Amazon actually lost market share slightly during the pandemic, which surprised us.
Right, I'm in the data daily, and this story kind of crept up on me. We take for granted that Amazon is this huge e-commerce player. We don't really think about it losing share to the retail chains that it's trying to undercut, maybe to another web-only startup, but to these big retail chains, it is impressive. How are they gaining so much ground, and how are they growing so fast?
Well, one clue, as we tried to answer that question, was we looked at what types of merchandise grew fastest during the pandemic. And as you can see, food and beverage grew the most quickly over the 3 years of the COVID-19 outbreak. And which of course makes sense. We all know as consumers many of us didn't want to go to the supermarket and turn to the web to buy our groceries.
Right, so it seems that there's, obviously there was a need to get groceries safely during that period, but that seemed like a good opportunity for perhaps online only grocery retailers to kind of jump in and build on that momentum. Why is it retail chains that benefited?
Well, online only retailers in the food and beverage category tend to be specialty retailers that sell coffee or organic food or beer. But for the main grocery shopping, consumers turn to the same supermarket chains and retailers that they normally shop for grocery with. So as you can see from this slide, Walmart and Target, which sell a lot of groceries as well as general merchandise, grew rapidly. And Albertsons and Kroger, which are two of the largest supermarket chains and are trying to merge at the moment, grew really fast. So it was really these chains that gained most of the ground from the advance in the food and beverage category. Publix was a bit of a laggard, in part because most of their stores are in Florida, where the COVID lockdowns were shorter, and there are a lot of older shoppers, and older consumers don't shop as frequently for groceries online as younger consumers do.
Right, and these bigger general merchandise stores like Target and Walmart have been building up online options since before the pandemic, really moving into that space. Target's drive up system was just rolling out to all of its stores in 2019. I imagine these kind of omni-channel features made it easier for shoppers to buy online.
Yeah, absolutely. And that really showed up in our top 1,000 data this year. As you can see, of the retail chains in the top 1,000, nearly 80% by the end of the pandemic were offering in-store pickup of online orders and in-store returns, both considerably higher than before the pandemic. Very importantly, a lot of them, more than 2/3 of these retail chains, now show on their websites how much inventory they have in store, which is really important because you don't want to go to the store and find out they don't have what you went to the store for. It's also the other thing that really exploded early in the pandemic was curbside pickup because consumers were reluctant to go inside stores. In 2020 and 2021, it really grew. But this turned out to be challenging, particularly for smaller retailers that don't have dedicated parking spots they can direct consumers to. So it began to tail off a little bit in 2022. And I suspect that going forward, we'll see that curbside pickup remains a good offering for retailers in certain categories and maybe not in others.
Right. And these larger retail chains, the ones that are able to shift more in the e-commerce area, they've got the real estate to handle drive-up orders, but they also have that technology expertise, like you're saying, connecting that in-store stock status to your front end and being able to see that online. It's not something that's necessarily simple to do over hundreds of stores. So they've built up a technology expertise to do curbside pickup working at scale. Imagine that technology prowess is also allowing them to compete with the tech powerhouse that is Amazon as well.
Yeah, and that really shows up in our data about mobile apps. As you can see, retail chains are the most likely of the four types of retailers to offer mobile apps. And mobile apps are especially convenient for consumers when they go to stores. Obviously Walmart and Target are very big stores, and through their mobile apps, you can find out exactly where in the store the items on your shopping list are. They show you coupons, and the apps are also play a big part in curbside pickup. So these apps are really convenient. Each year, consumers are more and more comfortable shopping on their phones, and retail chains have done a really good job of catering to these mobile shoppers.
Great. Well, thank you, Don. Thanks for these great insights from our Top 1000 report. You can always check out digitalcommerce360.com for more information. And this is some of the great data we have in our big report this year.